Hey, welcome back, everybody. Joe Verboski here with CMG Financial. I wanted to give everybody an update on where mortgage rates are headed. They've been doing exactly as I've been predicting, which could change. I've just been on the money lately. But I'm going to drag a chart over. I'm going to do this one a little bit different. And let me show you how I start making these predictions. Okay, so what you see here, this is the U.S. 10-year Treasury, okay? U.S. government bonds, 10-year yield. Like I've talked about this in the past, I use tradingview.com. You can set up an account for free and start to track these. They even have an app where you can track these on your phone as well. From your app, the display, just like this, you'll just have this watch list. And then as you click on it, a chart will pull up. So you may not understand charts, but you can probably understand if something like it's trending up or down, right? So far, over these last couple of years, we've been in an uptrend after we bottomed out. Obviously, right? We went up really fast, especially this year. But then what you're seeing here on this 10-year bond, and this is what most rates follow mostly, is this 10-year. We came down here. Now we're popping back up. We're going to see if this supply line right here holds and it gets rejected, which I think it will. And I'll talk about why. But this is my main thing for why I think rates are going to head down. Once you break this level here, this 3.37, you're probably going to come down to this 3.15, possibly even lower than that over time. But I do think this will be a slow downtrend, so probably rides this line down the whole way. Because the Fed still says that they're going to hike one more time, at least, maybe two more times. I personally think they might even stop. They might have done their last one, but they might hike one more time. I don't think they're going to hike two more times, personally. Let me show you why. Inflation's coming down rapidly. So let me check out this other thing I watch for inflation, and it's called Trueflation. Trueflation.com is what I really like to use. And the reason why is all the Fed indicators are lagging. So go to this app.trueflation.com and you can see the year over year USA, we're at 5.5. What was the last reading? 6.5, right? So the CPI is headed down quickly. I think this next reading will be obviously lower. The February reading is going to be lower because if you look in January, we were in this mid fives to lower fives already. Look, here's January 1st. We're at like 5.7. It bottomed out even at 5.3, right, on January 22nd. And then recently has popped back up a little, but it's starting to roll back over again. But either way, you can see that we've been in a downtrend. March, April was the peak. Well, when did that show up in the Fed data? Around like June, July. That was their peak. So what this chart is showing you is they're tracking this in real time. You don't have to wait till next month to know what the CPI is probably going to be, right? You can use this. So I think CPI in February will be around 5.5. So it's coming down rapidly, exactly as I thought. And then here's some other things that you can track to show you. I have this commodities list. You can create a watch list on here too. And all of these commodities have been heading down. I like to look at the 1 year because this is really what the year over year is tracking on. CPI is a consumer price index. It's a year over year reading, right? So We can see last year in February, oil was $89 a barrel. Right now it's $73 a barrel. So year over year, oil is cheaper than it was last year. Inflation in this category will most likely go negative if we stay here. Because look what's going to happen. Very soon, this oil is going to peak last year, right? Starts to go up to $128 a barrel, comes back up, hits $122 a barrel, right? So during this whole time, as long as we stay below that, you're going to have negative year over year on oil. Now let's go to another major one. I think this is corn. Yeah, corn. And you might not think corn is major, but it is. Corn is in a lot of food products. And you can see here, last year we had this big spike up. So what's going to happen? We are kind of uptrending slightly on corn here. But I'd say as long as we stay below this 700 number, you're still going to have a negative year over year number. There's going to be no reason for the Fed to keep hiking soon. Wheat. Look at wheat. This was this big scare because Russia and Ukraine produce like 80% of the world's wheat. Everybody got freaked out, thought, the price of wheat was going to, just go up forever. What ended up happening? Demand slowed. Russia circumvented a lot of the, sanctions. I think they just sell to India and China now, and India and China sell that stuff to everybody else. So the sanctions haven't really worked on Russia. Russia's had a really good year economically, which isn't really good for us and us fighting this war, really. But either way, that's another topic. And then I like to look at live cattle. So live cattle has gone up. This is skyrocketing. This is a part of the food category that's going up. Soybeans, see, coming down from here. So year over year, that's going to come down. Natural gas is a huge one. So this is energy costs. Everybody was scared thinking that natural gas was going to, basically just keep going up. People thought that people in Europe were going to freeze to death. And I mean, I remember reading the articles. You have to realize that the news is trying to sell fear. All news media outlets, I don't care which one. They make money selling fear because fear keeps you watching. I know the only time I really even watch the news is when major stuff is happening. I try and look for data and information rather than reading headlines. Most of those headlines are incorrect, and most people at news organizations are just flat out wrong. So I don't really pay too much attention to the news headlines. I kind of go through this information and data and figure out what the real story is. I don't care what the headline is. When natural gas is coming down like this, energy prices are coming down. Year over year, inflation is going to come down. Sugar, this has gone up a little bit. So as you can see, the food category, you have some opposites. Some of it's come down a lot. Some of it hasn't. So it's a little bit of a stickier area. I'm going to put that one in. Oh, this is the German power base load. Germany's power, that has nothing to do with our inflation. Either way, I like to look at these different things to help me to figure out where inflation's headed. But if you want to make it simple on yourself, just go to trueflation.com. Now, why does all that stuff matter? The only reason the Fed's hiking rates is because inflation started spiking. So I want to go back to this watch list and go down to some other key things. He says, so he did raise by a quarter point, as we can see here, went up a quarter point. I think he might do another quarter point, and we'll peak right around at this 5 number, is what I'm personally thinking. I think he will do another quarter point, so he doesn't look weak, and then I think he's going to pause. I think at the March meeting, he's going to pause. Now, that's only if this stuff keeps coming down. There's always threat of war, Ukraine stuff spiking, all that stuff's going on. But this looks like a pretty strong downtrend to me, right? Basically from 12 to 5.5 in less than a year, that's a 50% decline on the inflation rate. That's good. Inflation's coming down. It doesn't mean prices are going to go lower than they were last year. It just means that they're going to stop going up so fast. Inflation will never go, prices will never really go down. It's built into the monetary policy. Target inflation is 2% a year, which means the Federal Reserve's goal is to make your dollar worth 98 cents at the end of the year. Now, a lot of people say that's a scam, the money system's a Ponzi, all this stuff. But let me show you why this can keep working. Look at our GDP, right? So a lot of people look at this money supply, this M2, and they say, oh my goodness, look what we did. We printed so much money in 2022, which I believe this is unsustainable if we kept doing this. But this was a weird time. This was COVID, right? So to keep our economy from crashing, now inflation hit 20%, I think, during COVID. So that was very serious for inflation to hit that high. Businesses shut down. Everything was put on pause. You couldn't go anywhere. It was a weird time, right? So the government did the right thing, I believe. Now, I think they printed too much. And of course, they didn't have the correct oversight, kind of like we see them do with every spending bill. There's not correct oversight. So a lot of the money was wasted, I'm sure. And a lot of it went to fraud. But here's the important thing. This is starting to come down. So the money supply is coming down as the Fed tightens. That's good, right? So we're pulling back some. But what I like to see here, this PI, this is personal income. So yes, the GDP is increasing. Your money is getting devalued. But as the money gets devalued, personal income rises. But that's why it's so key to learn how to invest in things that outpace inflation. The main one being real estate. It's strong, it's sturdy, and it always outpaces the inflation rate. So if you don't want to lose money by inflation, invest in real estate. It's a no-brainer. I've showed charts in the past where in the 1970 average home price was $25,000. By 1990, the average home price was $75,000. That was the highest inflation period we've ever had in U.S. history. And during that period, home prices tripled. It's what's going to happen again. The home prices are not going to come back to 2019 levels. Why? Because the cost of goods to produce a house costs more than that. So you're not going to go backwards. And I know everybody thinks this crash is coming. It already happened. The prices are here. The rates are already starting to trend down. People don't care about what's in the news. They care about monthly payment, and the rates and prices determine monthly payment. Well, prices have started coming down. Now rates are coming down. What's going to happen? We're going to find a bottom in real estate this year, probably in the next 3 to 6 months. And then prices are going to start going back up as rates come down. Because this inflation is going to drop, and the Fed's going to stop hiking rates, and after they're going to cut rates. So just pay attention. A lot of people will show you this. Oh, the market has to crash. When did it? What happened when they printed it here? They printed. A lot of people thought, the market was going to be over after that 2008 crash. America would never recover. We're going to go into the Great Depression. That didn't happen. They did print money to get us out of it, but look at personal income. Personal income dropped here and continued up. You had a new all-time high in personal income by December 2010. The bottom of the stock market was March 2009. This was the bottom in the stock market. So literally like a little over a year later, you had a record high in income. What's going to happen again here? I'm telling you, this is a soft and light recession, probably because they printed so much money. There's a lot of money sitting around out there. Not everybody, I get it. A lot of people are hurting, and I definitely feel sorry for those that are. What I'm saying is this isn't the end of the world. The government and the economy is not going to collapse. Things will rebound, so invest accordingly. You can already see stock markets rebounding. Look at the Dow. This is the all-time high on the Dow. This was the bottom. Everybody told you that it's going to collapse. Oh my God, it's going to be the Great Depression again. Look what happened. We already bounced. We're not far off from all-time highs again. Same thing with the S&P 500. It's a little lagging. In the NASDAQ is definitely lagging, but they've all broken out of their downtrend channels. So I think we're going to see a little more upside. Definitely over the next couple of years, we'll make new all-time highs probably in the next 2 years or so, possibly in the next year. But I don't like to make calls like that. We'll see. Play it day by day, month by month. But either way, thanks for joining me on this. I think rates are going to be heading down. Excuse me. Mortgage rates right now, the average mortgage rate right here is telling you it's 6.09%. I'm already seeing them in the fives. I've got them in the fives. Remember, this is an average. Some mortgage lenders are higher than others. Our rates are below average. And one thing I will tell you that is absolutely awesome, you have to check out, that we have, no other banks have that I know of. We have a 10-6 ARM, and you can stack that with a 3-2-1 buy down, a 2-1 buy down, or a 1-0 buy down. So the ARM rate right now is in the mid fives, lower, like a 5 1/4. With a small buy down, you can even get that 10-6 ARM in the fours, like a 4.75. So I would definitely check this out. This is the best program, best loan product, I believe. In a 10-6 ARM, a lot of people have a negative thoughts about an ARM loan, adjustable rate mortgage. That's why I would go with the 10-6. What that means is it's fixed for 10 years on the front end. Very important. You're fixed for 10 years. Rates are headed down now. You're going to be able to refinance in the next couple of years. And we have a free refinance coupon for you as well. If you buy within these next several months, I think, I don't know when it cuts off. They haven't cut it off yet. But as rates do trend down, they will get rid of that free refi coupon. But it's a good time to buy. You can buy now, refinance later, probably within the next couple of years. Rates will be much lower than this because the Federal Reserve dot plot shows that. If you want to see that, go back to my previous video about the Federal Reserve dot plot and the Federal Reserve rate hikes. I'll cover all that information. If you like what you heard or you got any value out of this video, please like and subscribe. Share with some of your friends or coworkers, realtors. I'm happy to help. Give me a call if you need anything or have any questions. Other than that, you have an awesome day. Thank you.